So Chris Marcus had noted the open interest, how big it got. He wrote a couple stories on that, and then he and I had some conversations, and basically the question is, are they nervous or not? And the commitment of traders report tells me they're nervous, and it's not obvious. But if you understand options, it'll be obvious. We're not going to get deep into the options, but I'll just show you what to look for. That's the second thing. We're going to spend a decent amount of time on Bollinger Bands because it was such a nice trade for silver, and one went off in oil. Scott pointed that out to me when he asked me about it, and I'm like, "Oh yeah, we did have one, and I missed it." Right, Scott? What day was that?
It was a nice trade. I think it was the 8th of June.
Fucking A, man. Excuse my French, everyone. All right, so we're going to touch on the oil trade, and I'm using these as examples. Like you can be in a classroom where you're talking about the textbook, right? And sometimes we do that. But when events happen, you need to be able to take that opportunity to put more tools in your toolkit. So I'm looking at you guys as having toolkits, and if I have an opportunity to refine a tool or give you a good example of how a tool works, then we'll do it. And we've had two of those in the Bollinger Bands, and I see a couple questions about them as well. So I can talk about it ad nauseum. Randy understands it as well. And I actually have something new to add to the Bollinger Bands for butterfly and condor traders. So Randy, I think, and I would like that. But it would also be helpful to people that are hoping for a breakout. Is it a breakout? Is it a breakout? It gives you a little bit more filter. Next, oil. I didn't go through the commitment of traders on oil, but I started to look at it. It's very complex. And put it this way, I'm too lazy to go through it like I used to, but now it's WTI, it's Brent, because Brent's a more important contract than WTI now. It used to be that way forever. Um, as oil demand moves east, the center of the oil world moved east. For years it was Brent, and then in the 90s it was WTI, and then it started to move back east as Brent went over TI again, and now the whole thing is like, when they run out of oil in the North Sea, it'll probably be like Nigerian sweet or something like that everyone looks at. But WTI, Brent, WTI ice traded. There's a lot of contracts to combine now, and I'm just too lazy to do it. But I know what's going on behaviorally from the general aspect of it. Basically, it's what's going on in gold. What else? I'm also going to give you a back of the napkin way that I look at how much upside we have in gold. Okay, again, it's back of the napkin, but it serves well when you're trying to get a handle, when you're in an area as gold is about to be on the area of uncharted territory again. If we keep going higher, it's like, what's your next target? People will say Fibonacci's, or they'll say, I used to say Gann lines, or they'll have that measured move concept that I talk about. But there's a very easy way to get a good idea using open interest, especially if you're looking at commitment of traders. So I'm going to do that as well. All right. I hope to do this it's 2:09. I hope to be done by 3:10 for Father's Day, for your time as well as for mine. So let's trade some options on that. Let's assume that the option that I'm going to say 3:15. We'll be done at 3:15, or I'll be done at 3:15. Who thinks we're going to go longer than 3:15? Right?
Me.
Of course you do. Of course you do.
I'll take the
Right.
under.
You'll take the under? See,
Under.
there's
I'll
Under.
take
The over.
Very-
The fix is in. The fix is in.
because I'm
well,
going to
the fix
ask
is
you.
only in depending on who pays me the most money, right?
Well,
That's how it works.
I'm going to ask you who you've got something cooking with MSA. Any chance you're going to do that with Polytrends? You're going to let us loose on that?
Oh yeah. See these questions? He's going to take the over. See what he's doing?
Yeah.
Right?
I mean,
No,
I've been
I'm
waiting
not
for
going to do
weeks
it
to
today,
ask
but
that.
starting going forward, today's not a good day to do it because I am on a little bit of time constraint. But going forward, I want to start gambling. All right, not for money, like maybe for pennies or nickels or dimes to keep us honest, but we'll start trading options on how long this goes. This way we can all get a feel for options that don't understand them without causing pain. Basically, options are an over-under tool. Football, football game, over-under spread. It's going to be over.
Bets have to be placed before the webinar starts, before 2 p.m. How's that?
Yeah, something like that. Exactly.
Yeah.
Exactly. We're not going to do it today, but I just wanted to mention that, it'll keep me tight, especially if I start. I can't bet, but I can make markets. All right. I'll be a market maker. That's the point. I'll be the market maker. You guys will be betting, and I'll guarantee every bet. We'll do it for pennies or something like that. But we'll keep a running total. Okay, so let's start with the. So we've got the Bollinger Band. So hold on, let me get because my notes are really very cryptic today. Oil, Bollinger Bands. Gold weekly breadth. I want to do that too, right? That's good. Weekly breathing, I should say. All right, so why don't I just go through it? We'll just go through this as it comes up. Let me get the right page up here. All right, we'll start with the commitment of traders. Clean work, right? So we'll just start with that. Let's make a little bit more. We don't need to see this, right? So we'll go here. A little bit more room. All right. So here's the week. 5 days in red. Last 3 days not covered by the report in purple. 5 days in red was a down week, right? It's not a trend day lower. It's not a trend week lower. It's a normal variation. So it's a serious down week, but it's not a collapse in terms of terminology, right? So yeah, Monday was an up day. Tuesday started strong. Looks like some people got stopped out or stopped in, and then they got slammed, right? Next day is a classic down day. Next day, an up day after making a low. There's your fish hook, right? And then this day, open interest goes up and the market is nowhere. And then, boom, that happened. All right, so just to walk through, when you're looking at these, you're trying to figure out what's going on, right? This is Randy Blavish chart here on the right. Then I kind of make a hybrid there. And we go like this. We'll do the big boys are back in a second. All right, so on day one, the market was up within the range. 1,300 contracts go in. I'm looking at this right. 2, 3, 4, 5. Yeah. So one more thing. The week on net was boring, open interest wise. It was a confirmation of the COMEX dying. It also really was a confirmation of the market having very little interest. But no, those are not small ranges. Those are big ranges with no volume. That's how silver trades. The market is trading like it's broken. I'm not saying it's broken. I'm saying it's trading like it's broken or hung over, or there's no big players watching it right now for all the reasons I talked about before. But let's see what goes on. So, and then on these 3 days, it snaps back to the way it's supposed to behave when things are going on. So here we go. This week, behaviorally is normal. By normal, I mean the funds were in control. They drove direction higher. They drove direction lower. So on day one, we'll go back to this. Let me get my a drawing tool here. Is this it? No, that's not. They always do that one. Right. Okay. So day one, the green day, 1,300 contracts. The market is up a little. Day two, the market opens, goes higher, and then goes lower. Look at this. It makes a new high, still below that high, and someone smacks it. Who smacks it? I don't know. Open interest goes up by 800 lots. So on this day, you don't know if it's new short. It's new shorts and new longs getting in. But in the first half of the day, buyers initiated. In the second half of the day, sellers initiated. I don't know if the buying was short covering, right? The buying could have been short covering, and then the market comes off. More likely the buying was fresh buying because there's a little bit of a bull flag here. And someone said, oh, look at that. It broke above this. Let's buy it. New highs, some buying comes in, some short cover comes in, big selling comes in. And so basically you have people buying the dip all the way down, but they're locked, they're getting in and they're not making money. So new longs did not make money on this day. New shorts, however, did. Next day, market has a big down day, down 2,100 contracts. So you can make the case that The market's down significantly on light volume. I'd have to look at the volume, but the open interest doesn't change much. If the volume was heavy, that means if the volume was heavy, then that means there were people buying the dip. If the volume was light, then that's just people puking. So we'd have to look at that. I'm not looking at that now. The next day, open interest down another 1,400 contracts with the market up. So that would be the market going up, right? The market starts out, goes lower. See what happened here with people buying the highs? People sold the lows here. Market opened here, made a new low inside this congestion area, right? And they got stopped out. So I think you had new shorts selling the open and new longs buying the close, just like you had new longs buying the open and new shorts selling the close here. So these are kind of like a bookend trade. Then you have this day, which is the mystery day, but it's the day that makes you think it could be a fish hook, right? So not a pure fish hook, but we don't see pure ones anymore, but we do see them. Market is unchanged, peaks higher, peaks lower, but open interest is up 2,600 contracts. This would be your Paul Tudor Jones types buying this area. It's off the lows, it stays in here. Somebody starts covering, somebody starts buying, but they have an opportunity, a window of opportunity to buy. Then we go to the last 3 days, up 6,000, up 9,000, up 9,000. So Randy and I, and we've all noticed this, but Randy and I have noticed that rarely do we have 10,000 days, 10,000 open interest days, 10,000 contracts of open interest coming into the market on days before macro discretionary got involved. And when they do happen, like for example, in the old gold, you would have a 10,000 contract open interest here, and that will be the end of it. And then the market would crap out. Now in the new gold, you have, these are 9,000, I'm calling them 10,000. You have 10,000 lots of open interest getting in on 2 days in a row. That's macro discretionary getting in. And it's not the end like it used to be. It's closer to the beginning, especially when the open interest is on the lows. So I'm saying the big boys are back, and I'm saying that the confirmation is given by the volumes and the open interest changes. The behavior is given by the geopolitical reasons and what have you. So I have said in the past, in a not too distant past, that I'm worried that macro discretionary won't come back because of the fixes in on the market and the market is capped. I still believe that. So we may not get as much buying, but we are going to get people buying. So that's something to think about. It's good. There's like, I'm not throwing water on it yet. I'm just saying it's good. It's like, I'm going to be very bullish by the time this conversation's over. All right, so there's the big boys are back. Let me see.
Vince, can I throw in something?
Yeah, hold on 1 second, Iggy. Oh, look at that. Wait, is this the Iggy that didn't used to have anything to say? Used to type everything?
We type everything. We lost power at our house today for 2.5 hours, and so I had to join by phone.
That's funny. That's funny. Hold on to your question. I want to answer Arenas first. Didn't we have large volume days last time the conflict broke out? Yeah, we did, Arena. I don't remember exactly. Does anybody remember exactly what was going on then? I mean, I remember what happened October 7th. The Gaza invasion started, and we had noticed, and I dismissed it, but we had noticed couple large volume days on the lows, and it seems like that's when I started talking about the concept of bank traders get tapped on the shoulder and say you should cover, something's going on. But did we have large volume days back then as well? We had to have, right? We had to have. Can anyone contradict that? Unless you're being rhetorical. Are you being rhetorical, Arena? I'm going to say yes, we have large volume days.
No, I'm being dead serious because I think we talked about it.
That was the October 7th, right? That whole thing?
Yep.
That really stuck out. That period really stuck out because a couple days into the war, we got the open interest. And I remember looking back going, look at that. We had shorts covering on the lows. It's like, damn, those banks are smart. And we talked about the tapping on the shoulder thing. So I think Arena's comment here only makes us more bullish, you know? Okay. Let me, I have a lot of like little things on my screen cluttering it up here. All right. So Iggy, what's your question?
It was a comment regarding the last 3 days of the week. Obviously, the Israeli hit on Iran was on Friday morning at 3 a.m. and
Right.
that volume started up several days before, even before
Oh,
they
yeah.
started removing their, diplomatic corps from places in the Middle East. But
Yeah.
I wanted to throw out that I saw a graph of the put call ratio, which has
Oh,
been
yeah.
dropping, and the calls, which about 30 days ago, they started paying up, and they like so,
All right, Iggy, hold on one second. You're hold on. Your signal. Do you hear me, Iggy?
I can hear you.
Okay, your signal's chopping up. That cellular in and out thing. But I'm gonna try and make sure that I get most of it out to everyone. On what he's saying is, tell me if I'm getting it correctly. Is that before the invasion, the market rallied, and during and before the first part of the market rally, the put call ratio changed. Is that what you're saying? At least part of it?
Yes, and that was dropping.
Yeah.
Longs, increasing at the bottom.
Okay. Jesus, I'm going to ask you to go back to typing. It's hard for me to hear you. I'm thank you for contributing. So everyone, what he's adding is that smart money was getting in before the bombs dropped. Smart money was getting in even before, if I'm hearing you right, Iggy, smart money was getting in even before the Trump warning went out. Is that right? Is that what you were saying?
That seems to be the case.
Yeah, okay. Yeah. So there you have it. I mean, uh yeah, I mean, it's classic. Classic stuff. Now, mind you, these things happen probably a lot, but this one was a little different. And all right, so there we go. We know it's for real. I personally, just throw a little opinion out there. I have been reading opinions about this. You saw the J.P. Morgan and Goldman ones. J.P. Morgan, it's worse than it looks. Goldman, it's not worse than it looks. I saw one from BCA, and as much as I like them on certain areas, I heard a take that I didn't really think I didn't agree with it. Let's put it that way. And their comment was, I didn't send it to you. Their comment was, we don't think it will last long. I'm simplifying. I'm not mocking them. We don't think it'll last long because they haven't lasted long in the past, citing the one last year when in 2023 when Iraq, these short-lived things. Basically Israel attacked and Iran did a pushback just to show that they're tough, and then it ended. It was over. I remember that one, and BCA was saying we think it's going to be another one of those. And in my mind, it was like there's no way it's going to be another one of those. I read this like the day that it started. I'm like, there's no way it's going to be another one of those because and this is like where subjective probabilities come in. Trump closes the deal with the Saudis, locking in the Saudis. Trump closes the deal with the Middle East. I mean, with China, and then Netanyahu just decides to start bombing people. I mean, and Trump is talking about we want to have a negotiation with them. He's always trying to take credit for stuff, and that's great because he's giving warnings to people doing that. So anyway, there are people out there that don't think, not everyone thinks like, I think this is going to be a problem, right? I think this is going to be bigger and more chronic. There are still a lot of people out there, call them neo-Keynesian or the past is prologue types, who think this is not going to be a problem. Now, maybe I'm wrong, and maybe this will end. But I think it ends with everyone coming together, or at least not attacking each other, and everyone gangs up on Iran. I really think that. But that opinion is really not valid, except that it's an opinion. The reason I brought that up is because is I think this could go on a lot longer than it already has. Number one, right? Uh, Number two, to Arena's point, we saw a lot of volumes and we saw behavior like this in October, October 7th, right before October 7th, and right after October 7th. And number three, to Iggy's point, we saw buying before, like the third day, that's Friday, right? Friday? Yeah, Friday. Friday. This, I mean, look at this. Friday is